Investments are assets or money dedicated with the aim of earning profit in the future with the increase of value. It is important to consider many facts when making an investment, such as the market value of said asset, behavior, current price values, and etc. With this being said, here are top investing tips by 5 well-recognized investors to help investors make a profitable investment. Number 1. Success in investing doesn't correlate with IQ. What you need is the temperament to control the urges that get other people in trouble in investing, by Warren Buffett. This quote brings out Warren Buffett's wisdom, who is the chairman of Berkshire Hathaway, with a personal net worth of over $100 billion. He is well known as the role model for investors out there who expect higher and wealth-building profits. He is well known as the chairman of Berkshire Hathaway, which runs more than 60 companies worldwide, and a market capital of over $650 billion. Warren Buffett exclaims that making emotional decisions and using your heart instead of your brain when investing could lead to destroying your returns. When you are seeking long-term and market-beating investments, it is vital to not be led by the urge to invest in haste, without considering market facts, such as the current financial situation of a particular company, market capitalization, and etc. What you need is the ability to control your emotions and practice to be led by your research and due diligence. According to Buffett, it isn't expertise or education that is the most important thing when investing, but rather, it is in the ability to think and make the right decisions regardless of your emotional situation. Someone may not excel in math, which is an important element in finance, but they can and will be able to achieve great results when investing in the stock market or the cryptocurrency marketplace. Moreover, one doesn't have to be a professional in financial management to invest. As Warren Buffett clearly states by saying, success in investing doesn't correlate with IQ. If the investor possesses knowledge in market rises, the situation of stocks, and market behavior, and has the skill of analyzing all the facts, he would be able to make a high portfolio return from his investment. This quote is an encouragement to those who feel discouraged for not possessing sufficient knowledge or high honors education. What matters the most is market knowledge and being brave to take the risks. Number 2. Those who keep learning will keep rising in life, by Charlie Munger. Charlie Munger is an American billionaire and an investor who is the vice president of Berkshire Hathaway. He also holds the chairmanship of the Daily Journal Corporation, which is an American publishing company in LA and California. As of making this video, his net worth, according to Forbes, is $2.4 billion. Simply put, Charlie Munger insists to learn and acquire knowledge. Learning isn't only what you acquire through books and studies. You can also learn from experience too. If you are an investor, you learn every day. The experience you acquire and the mistakes you make are all a lesson in your career. If you keep learning without being discouraged, you could turn your biggest mistakes into your biggest life lessons. When you invest, you take on a risk, and with a risk, there comes mistakes. But mistakes are only lessons for the future. Nothing comes in easy, all the hard work and mistakes are a part of life. As an investor, it is important to learn about current market trends in stocks, as well as companies and current situations in the world economy. With knowledge of these events, investors could be aware of which stocks are expected to move up, and they could analyze the risk involved in an investment to make calculated trades. After all, knowledge is what helps grows your investments. Number 3. Focus on buying an existing and well-understood business with an ultra-slow rate of change, by Mohnish Pabrai. Mohnish Pabrai is an Indo-American investor and businessman. He was born in Bombay, India, and started working in international marketing and sales. He is the manager of Pabrai Investment Funds with over $400 million in assets under management. His most famous investments include the investment in 4.1 million shares of Graftech International Limited and 4 million shares of Seritage Growth Properties. This increased his take by approximately 35% and added 5 million shares to his fund. Mohnish Pabrai is known for investing in stocks he believes to have a low risk but high uncertainty. For instance, recently, with the ongoing pandemic situation, Graftech, being engaged in steel-related industries, would suffer a downfall as the world economy downgraded, greatly affecting construction and other economic activities related to steel and its production. However, Pabrai chooses to invest in a company with a no-equity cushion, where its debts are greater than its assets. With all these uncertain situations, he held on to his investments, which ultimately resulted in an increase of his stake by approximately 35%. According to Mohnish Pabrai, an existing business organization with a well-defined history can be a low-risk investment compared to a startup business. Investing in businesses with a low rate of change can further lower the risk of losing your money and result in a decent portfolio return, because the lower the change within a specific period of time, the lower the risk of downgrading of stock values. He also expressed his parallel ideas by saying, "Look for mundane products that everyone needs." Following this requirement alone eliminates 99% of possible investment alternatives. This way you could find stocks with great upside potential with a minimum risk of losing the invested money. You will be able to assess the competitive advantage of a stock and anticipate its durability. Moreover, Mohnish Pabrai's quote can be broken down into several questions investors should consider in making a profitable investment. Investors should examine if they understand the business well. Investors should consider the rate of change in value and price patterns of a stock. It would be most likely a good investment if the downside is at a minimum. Investors should consider the actions and past records of the management. One should consider investing if they could meet with a positive answer to all the posed questions. If you get offered a well-understood company at a low value, then its intrinsic value, with the downside at a minimal rate and occupying a low risk, buying it is a great opportunity to make money, and it should bring better returns in the future. Number 4. Behind every stock is a company. Find out what it's doing. By Peter Lynch. Peter Lynch is an American investor and fund manager, as well as a philanthropist. He served as the manager of Magellan Fund, which is a mutual fund from the Fidelity family of funds, and perhaps the best actively managed fund, well known for its iconic growth during the management of Peter Lynch in the period from 1977 to 1990. Peter Lynch, one of the best investors of all time, due to his skills in finance management and world-famous investment strategies, exclaims his strategy of making the perfect investment. It's an obvious fact that behind every stock, there's a company. And by finding out what it's doing, or particularly, finding out its financial position, management, past ventures, market capitalization, and etc., it would be easy to have a general idea of how the stocks would perform in the stock market. Peter Lynch outlines his strategy of buying stocks with growth and potential, as well as stocks in a turnaround position by meticulous analysis. Through rechecking stocks regularly, and not panicking when others sell, one could have faith and believe in the performance of a certain stock, while getting a high return. With this being said, it is important to analyze and invest in stocks with discipline. The time an investor spends on researching about a company stock would not be a waste at all. Thus, Peter Lynch's theory is summarized upon the fact of possessing knowledge on the company's behavior, along with studying the market situation of stocks. The lower the risk, the higher the expectation of a profitable return. Therefore, focus on gathering practical experience regarding particular characteristics of a company. Number 5. Markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. By George Soros. George Soros is an American billionaire investor and financier of Hungary origin with a net worth of $8.6 billion. He is also a philanthropist and has donated more than $32 billion to open society foundations. This quote emphasizes Soros's theory of investment, which involves gathering critical information of a particular stock, building faith through meticulous analysis, and finally, investing. The phrase, betting on the unexpected, brings out George Soros's call out of investing when others are divesting. As said by George Soros, market situation is uncertain and hard to predict. With this, he uses a unique method of valuing assets based on market feedback, such as views of expertise and market analysis, which helps predict market bubbles. Furthermore, as mentioned, money is made by discounting the obvious and betting on the unexpected. Soros explains, going for the obvious at a glance would not always be successful. Therefore, Soros uses a method of analyzing the market data and testing his theory with a small initial investment, and if everything goes well, he broadens his investment. This theory could be applied by investors where they stand between two decisions, to invest or not. A small initial investment would provide the necessary fact to those questions. If an investor possesses a portfolio of $1,000, he could first try putting in $50 to test before broadening his investment. Investors could learn the way of George Soros by not being too bold on an investment after you've made up your mind. Because after all, according to Soros, enduring pain and uncertainty is a part of the game. What did you think about these 5 quotes and 5 investors? Let us know in the comments section down below. And as always, remember to like this video and subscribe for more content related to money.